And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani, joined today by John Davi of Astoria Portfolio Advisors and Todd Rosenbluth of CFRA. The NASDAQ Composite exiting correction territory today as we await Alphabet earnings after the bell. Alphabet is a major component of the NASDAQ. Its Class A and its Class C shares make up a combined total of more than 8% of the QQQ NASDAQ 100 tracking ETF. But it's also one of the biggest components in the communications sector. Check this out. Alphabet makes up nearly 24%, a quarter of the XLC Communications ETF, followed by Facebook, which is also there, pretty big at 17%, Netflix at 6%. So what ETFs should you use to trade Alphabet, Todd? It is amazing to me I approve of market cap weighted ETFs, but when you get these giants that come in, like your Netflix and your Alphabet, and they dominate it this way, it's very important to understand what you're owning. You're buying an ETF, a quarter is one stock, and 45% essentially is three stocks.
Right, so the communication services sector basically took over what used to be the telecom services sector in the S&P 500 that was dominated by AT&T and Verizon. What you've essentially swapped out if you owned VOX, which is the Vanguard Telecom, or it used to be the Vanguard Telecom ETF, which is now the Vanguard Communications ETF, is you now have a heavy load of Alphabet and Facebook and Netflix, more of these FANG stocks, more growth-oriented stocks you'd find in the QQQs, not the dividend-paying stocks that are normally known as telecom ones.
Right. And John, you specialize in advising clients on the right ETFs to pick. There's nothing inherently wrong with market cap weighted. It's a great thing when you've got FANG stocks moving up and you've got a big market cap weighted in FANG stocks. But when you move to the downside, all of a sudden these could dramatically underperform. These are momentum names by and large. And so how do you address that? I mean, do you advise clients buy when the momentum's with you and sell when it's not with you? What do you tell people about when you get these kind of awkward weightings, I guess you call them?
I think if you're trying to capture the risk characteristics of FANG stocks, which are momentum-driven stocks, in my opinion, I would probably use something a little bit more diversified, something like MTUM, which is the momentum ETF. So if you take XLC, basically 46% of the MTUM is from the XLC ETF. So it's another way to get like exposure to that theme, and you have a lot more diversification benefits.
Right,
so,
but here, if you buy the MTUM, you're buying momentum names in general. These are stocks that are exhibiting above normal price differentiation over a small period of time. They're not necessarily communication stocks. Or
correct,
stocks
but there's a
that
lot of the stocks that are in the communication ETF are also in the MTUM. So, I mean, since XLC's been around since July, it's down 10%. The MTUM is only down 3%. So it's a way to kind of get a little bit more diversification and protect the downside.
But what you find also so MTUM rebalances every 6 months. So instead of always having Alphabet and Facebook and Netflix, it'll rotate and added some healthcare exposure later on in the year, became a little bit more defensive. So you need to really look inside the portfolio on an ongoing basis, not just assume you know what's inside.
But the important thing here is this communication ETF is going to move on the earnings report tonight, and people need to be aware of that. So I put up the sectors every morning at 9:40 when the market opens, and if this is going to be down 3%, it'll be because Alphabet is going to be down 3%.
Right, but it benefited. So Facebook was up last week after what was believed to be strong results. We at CFRA agreed with that, and the stock continued to move higher. That helped XLC. Yeah. If Alphabet disappoints, we hope it doesn't, and we don't think it will, then you'll obviously see the negative impact of that.
Final thought here on this sector. People will often write to me and say, well, the ETF that holds the biggest amount of actual Alphabet shares is the SPY, or the S&P 500. I think that's true, but not interesting. Would you agree that doesn't really matter that much? They have the most amount of shares because they're the biggest ETF that's out there. That's not what we're looking for. We're looking for what influences the ETF, and obviously here it's the communication sector one that really would be moved by Alphabet's presence.
Right, so the stock tends to move what's inside the ETF and makes the ETF go up or down, as opposed to these ETFs are moving the stocks.
Right.
So how much total share counts it owns is less important.